Hi, how are you today? My name is Samuel Ibanda, and as usual, I'm your transformation coach. I'm here to speak about money, and today I want to speak about loans. I know this is a very common thing that happens not only to business people but also to employees. Continuously, you're looking forward to grow bit your business, or but also as an employee you want to grow your assets. You want to drive, you want to get married, have a very nice wedding. Yes, you want to do many things in life. So continuously you ask yourself, I if I have not enough money, how can I still be able to attain this? So many cases, many of us um, are forced to take loans, or we feel it's the rescue for us. So basically, today I want to speak about five things that you need to take into consideration before you actually take any loan, either salary loan, or you're taking this as let's say a business loan. There are certain things that may seem to be what should I say, may seem to be obvious, but they need to be taken into consideration, because if you don't, then it's highly likely that you'll actually take that loan, and that loan will become a burden to you. So I want to give a disclaimer and say loans are good, and it's good to take a loan if at all you're taking a loan for the good purpose. But also if you're in a business, and we all know you cannot easily grow very fast only based on equity. You need a loan at one point in time. So before you take a loan, first think about the purpose of the loan. Why do you need the loan? Basically, why have you made a decision that you need to now go to the bank and find that loan? Because that fits into even the way you structure yourself. Because you're not just going to face a bank and say, I want a loan for this, and you think the bank will just bring out the money and give you the loan. The purpose is very key, and one of the first things that any bank will ask you, any financial institution will ask you, is what are you going to use the loan for? So if, for example, you're going to use loan for your business expansion, some of the things that business banks or any financial institution will be looking out for is the aspect of what are some of your sales projections. If you expand your business, what is likely to replicate in terms of your sales revenue, and that will depict in terms of will it be able to pay back the loan. The purpose also helps the bank identify that you actually, whatever you're taking this loan for, is something that can give back money, because everyone is afraid of giving you money, and at the end of the day they are not getting the best out of it. So you need to think about the purpose, why you need the loan. And in this same thing, I want to also share and say that only take a loan when you need it. Don't take something because you're going to do something that doesn't give a return. You want to, let's say, maybe you want to hold a party and you are going for a loan. Some of these things need to really be thought through. How are you going to be able to pay the loan? That's why we have the good loans and the bad loans. So it's good for you to take loan for the right purpose and for something that you really believe that you can actually be able to pay back. So yes, purpose. The other aspect is, of course, the security. Now, mostly, nearly every loan comes with the aspect of security. How, what are you giving to the bank, that in case you're not able to pay, that they can easily take and maybe be able to regain their money? So if it's security, you need to think about certain things. I've seen and heard, of course, definitely many people giving their houses as security, giving their cars as security. Of course, it really varies, but I think the overall point here is, before you give in security, definitely, of course, the security needs to match uh, the value, or be over and above, depending. But also you need to think about, in case I don't pay back this loan, am I ready to lose this security? Sometimes it's the only thing that you really have on you, and you feel like, okay, I need to give out this so I can get the money. So think about that. After you've thought about the purpose, think about the security that you're going to grant to the financial institution, because many people have really lost their securities in just simple ways, because they underlooked some certain kind of things. And then of course also the terms and conditions of the loan. So you have your security, you have the purpose for the loan, and now you face the bank. Now the terms and condition, you should understand what are the terms of conditions. And here we're looking at how many installments do I have to pay to the bank, and after how long am I going to pay this loan as a whole sum, or I'm going to pay in installments. These things seem to be obvious, but they are very critical for you to understand. For example, if you're in a business, for example, like us, uh, you may want to consider and think about, okay, based on my sales projections, if I remove part of the loan installment, maybe plus the interest, and I'm paying this monthly, can I be able to remain with some money that can enable me to be able to buy raw materials or buy other inputs that can help me maybe be able to make more money? Because based on your sales projections, you'll be able to tell the cash inflow that will be coming. So that is very critical, that as you look at. And of course the other is the aspect of interest that you need to also very take seriously, because mostly loans will come with an interest. So what is the interest rate, and how does this picture into the market interest rates? But then also, before you take any loan, you need to make sure that the interest is lower than the return on investment. Because if the return on investment is, let's say, maybe 10% and the loan interest is at 15%, I wouldn't really encourage you to take the loan. By return on investment, basically here I'm trying to say, you put the money you put in vis-a-vis the return, what is the kind of percentage in terms of the net return on that investment. So any good loan is one whose interest is low compared to the return on investment. You get it? For example, I'll give you an example. If you want to invest, let's say, in a given maybe treasury bonds, could be, you need to look at and see what is the interest rate that government is paying me on these treasury bonds. And let's say if they are giving you, let's say, 15%, yours should be, if you want to use a loan as a source for this, which is something I don't encourage, try to evaluate and understand how much, what am I going to be charged vis-a-vis what I'm going to return. So you get a picture. So if you're going to be charged 15% and government is giving 10%, it's not worth it well for you to take. So that is also something to really take into consideration. Of course, the other is also to look at your we in finance we usually call this the gearing position, in terms of how many other loans do you have, and when you compare those to your equity that you have in the business, how is that comparable? Are you over indebted in terms of, do you have a lot of debts? Because instead of focusing on actually getting more debt, it's good for you to also think about your current debts, because if you take more and more debt, you'll actually end up into problems. And that's why we've seen people going into bankruptcy and people being arrested. Your securities are impounded by the bank, several kind of things. So today you have a loan and you want to take another loan. So it's very critical that you focus and make sure that whatever you're taking, if it's a loan, you actually doing a due diligence. And also with lenders these days, you have to do a due diligence. Not every lender who comes and tells you, comes with sweet words, is actually right. I usually encourage people, if it's all possible, go for a loan from the bank rather than going for a loan from these normal money lenders that are not even registered, because there are things that the bank will give you that you cannot find from these people. And who knows, even we've seen people lose securities just because they went to unauthorized lenders. So that is very good. So before you take a loan, think about it, because this is not something that you're just taking for today. This is something that will really have ripple effects in the future. And of course, take only good loans. Don't take loans to do things that are luxurious in nature, and think about your financial status, because the more debt you're in, the more problems. And unless you using the debt for the right purpose, you'll actually end up in financial distress. So I just felt I should share a message around this, and I hope this encourages you, and I hope this answers some of your questions on when to take that loan. Thank you, and cheers. God bless you. Bye bye.